everybody. We're so glad that you're here with us tonight. My name is Kara Miller-McCarty. I work here as an event planner. We're so excited to have you at Poe & Company. Raise your hand if it's your first time here. Wonderful. I hope that you got the opportunity to look around. This bookstore's been open for 3 years. Our owner, Kate, is in the back. Hello. We love to have events that bring in more community members. We have lots of things planned on any given day. We have 4 different book clubs. We have some book clubs that host their own events here. We have different authors who come in. We have a lot of things happening in February, including some Valentine's Day events. So if you don't follow us on Instagram, I encourage you to do that or to look at our website, and that's where we keep all of our events advertised. This space that you're sitting in now is our event space that opened April 1st, so it's not yet a year old. We love to have it. We love to have events like this over here, and we're so glad that you're here with us. I have the distinct honor of introducing Andre Benjamin. He is the host of the CEO of Destiny Show. He believes the creator is humanity's greatest investor, seeking the best return through healthy families, strong relationships, meaningful work, and lives of excellence. An author and entrepreneur himself, he's written the Ashman Chronicles children's series and interviewed top founders, authors, and creators. And he will be here with his book on February 7th as well.
Oh, cool.
His greatest honor is being husband to the bride of his youth and father to his 3 children, the 3 Z's. Welcome, Andre.
Thank you. So I have the distinct honor and privilege of having 2 strong thought leaders in the building. This is not your first time to Atlanta, but is it your first time?
Not my first time.
Not your first time?
No.
So they're veterans, but they came from a long way. They came from a long way. I have Seth and Elizabeth, Seth Levine and Elizabeth MacBride, and I want to say a couple things about them that I've gotten to know in the times that we've chatted. It's number one, they are very passionate about their work. They have a strong desire to see reform take place in not only the capital space, but in what is happening with businesses, because we see a lot of divisiveness in the nation. I think Seth and I had a conversation before about kind of it's been a long-standing thing where it's polarizing on both sides, but to say I like that their work is centered on how can we come together and get to solutions? How can we be solution-oriented? So I want to give a couple of warm-up questions for you guys before I do your formal introductions, because I want people to get to know you more as a person. So for Seth, you spent decades inside of venture capital and the innovation economy. What is one experience with a founder or community that most changed how you think about who our economy is really built for?
Well, first of all, thank you, Andre.
Yes, sir.
Thank you, Poe & Company. Thank you all for being here. Just a quick plug, if you don't already have our book, it's available.
Yes.
But there's also lots of other books here that are also available for sale. They're not window dressing. So my wife owns a bookstore. We do events there, and events really drive a lot of great new people to come in, but also we're here to sell books, not just ours, but lots of books. So just if you have anyone you want to buy something for, Valentine's Day is coming up. Nothing says I love you better than a book.
Better than Capital Evolution.
Well, yeah, better than, yeah, honey, I love you. Let's talk about the future of capitalism. I'm going to try that. I'll let you know how that works. I'll let you know how that works. I will tell you the story of why we started thinking about this topic.
Absolutely.
I was at it because it relates to the question you asked. I was at a dinner. I was in New York. My day job is a venture capitalist, and I was the only out-of-town board member. So it got late in the evening. Everyone else left. It was me and the management team, and it was shortly after Dobbs, and we were talking about another CEO in our portfolio had written something about Dobbs on LinkedIn, and a bunch of people on both sides of the issue were getting on his case about it. Like on the one hand, he didn't go far enough in sort of defending, and on the other hand, other people were saying, no, this, I work for you, but this doesn't actually fit my belief structures. And the CEO asked me a question. Would you take a lower return on behalf of yourself and your investors for us, our company, living our values? And he was telling me it's a company, it's a pretty big business, and it was he was telling me, half of our customers are Fortune 100 customers. And he was like, we changed our logo for Pride Month last month. I didn't even think about it. But yeah, probably some of our customers and clients, if they go to our website, and it's not the type of, they wouldn't necessarily be hitting the website, but if they'd noticed that, they may not have appreciated it. And so I gave him a super equivocal answer in typical VC fashion. I was like, oh, you don't have to choose. But it actually made me think about it a lot. And so I just kept waking up with that question. And so I did what I do when I have interesting questions all the time, which is I called Elizabeth. And I was like, hey, this thing happened to me in New York. What do you think about this? And we started talking about it. And she's like, we should talk to some people about that. And so we talked, not with the idea of writing a book, but just let's dig into this a little bit. And so we talked to some people and had some interviews. And that's when we realized there's a much bigger thing to talk about, and we'll talk about what that is in a bit. But that was kind of an interesting time when a conversation with a company that I work with in my day job really started me down a path, which ultimately led to our writing this book, but started me down a path to think differently about something.
Love it. Clap it up. That was
there you go.
Good answer. So his formal introduction is Seth is a nationally recognized venture capitalist. He's an author and co-founder of Foundry, a Boulder-based investment firm backing early-stage technology companies around the world. He is co-author of The New Builders and Capital Evolution, The New American Economy, which we're discussing tonight.
Both with Elizabeth.
Where he argues that the real engine of American capitalism is small, often overlooked entrepreneurs, and that capital systems must evolve toward what he and Elizabeth call dynamic capitalism, which we'll explore more tonight, focused on long-term value and shared prosperity. So clap it up for Seth. Also, Miss Elizabeth, we're so pleased that she's been here because her sister's here, so she must come here quite a bit, or her sister comes to visit her in DC. But Elizabeth MacBride is an award-winning business journalist, author, and the founder of Times of Entrepreneurship, a platform dedicated to telling the stories of entrepreneurs, especially women, people of color, and builders outside traditional power centers. She is co-author of The New Builders and Capital Evolution, has helped launch and explain innovations like robo-investing to the mainstream, and has spent her career reporting from boardrooms and small towns alike on how money, power, and opportunity actually move in the real economy. So clap it up for Miss Elizabeth. So Elizabeth, my warm-up question for you is, you built a career telling the stories of people left out of the usual entrepreneurship narrative. What is one entrepreneur or community that flipped your own assumptions about who is getting capital and attention?
Yeah, so this is, well, there's many, right?
Absolutely.
I feel like I've been very privileged to meet a lot of business owners, small business owners, and tell their stories. So I'm going to give two. I'm just going to exert authorial
It's like
privilege.
picking your favorite child.
Yeah.
Right?
Well, I'm going to do
I don't know,
one.
that's not that hard.
I'm not going to say which one.
I mean, it changes week to week, but
Yes, it's
at
changing.
any given moment, you pretty much know.
Yes, it's always fluid.
That's fair. So I did a ton of work internationally. That's actually how I came into the entrepreneurship space. And I was working, reporting on entrepreneurs in around 2013 when the Syrian civil war was happening. And so I made a practice of reporting and interviewing kind of big famous entrepreneurs, because I could sell those stories very easily to places like CNBC, because they always wanted to hear who's built the latest $1 million, $1 billion business. And so, but every time I interviewed one of those people, I made a commitment to myself to interview somebody who didn't have all those advantages. And in the Syrian refugee crisis, it was easy to do, right? Because anywhere I went in the Middle East, I would meet Syrians who had been thrown out of their country. Displaced. And they were typically the Syrian population, very highly educated and known in the Middle East for being incredibly entrepreneurial. And so I happened across a woman who was the founder of a soap collective. Jihan was her name. And she had been forced to leave the country. She'd been thrown into prison, had to flee. She'd gone to Istanbul, but she figured out a way to get Aleppo soap, which is very famous, out of the country. And so she was selling it in markets in Istanbul and sharing the proceeds with 50 women back home who were crocheting coverings for it and were helping with the export of the soap. They called it the Gar Soap Collective. And it was, I wanted to tell her story so badly, but Forbes was sort of like, we really like it when you do those like billion-dollar, million-dollar companies. And so I was like, well, how can I tell her story? And so I said, you know what, she's an entrepreneur just as much as anybody in any of these million-dollar, billion-dollar guys. And so I called her an entrepreneur, and she later told me that made her feel this intense sense of pride. And gave her more of an identity. And that really launched me on this idea that if I called small business owners entrepreneurs and people doing things like what Jihan was doing, that it was a way to give them more of a voice than they had in the business sector. And so that's one. The second story, I'll make it shorter. I just love to tell it. During the pandemic, I really wanted to get out of DC. It was after January 6th. And I really was like, I cannot be in this city right now. And so I booked three train tickets for me and my two daughters, and we went down to Arkansas. Because I do like to see things that are going on in the middle of the country. And we met this incredible family who, they were the grandchildren of sharecroppers, and they had had great careers in corporate sectors, but they came back to their hometown in Helena, and they had started a sweet potato distillery called the Delta Dirt Distillery. And so, telling their story was just a reminder that, like, people do, to Seth's point, like, business owners, they had invested $1 million in this, but they weren't doing it to make more money exactly, right? That was one of their things, but they were doing it because they wanted to build the economy in this town that they had been born and raised in. And it just reminded me that in the real world, as much as we say business people are all about profits, in fact, many, many of them are motivated by other things.
Love it. Clap it up. That was powerful. Two powerful stories. I have a question. I asked Seth when I interviewed him about the book already, and I asked him about, there's a framework about who, not how, and how you can get a particular who is strong in an area that you're not. And I asked him about why you're a who, and he had a great answer. And I want him to share a little bit about why you guys work well together, and then I'm going to ask you the same question.
I don't remember what I told you.
It's recorded.
We recorded that a while ago, so we'll have to see if I say the same thing. But yeah, no, we have a great writing partnership, which kind of happened very naturally. It was originally, Elizabeth interviewed me for a story she was working on, and we just, I don't know, we were talking about some other ideas and trading different concepts back and forth, so it worked out really well. But she's an excellent storyteller, and I sometimes joke, like, I write in a straight line, right? Where if I start a chapter, I start at the top, I sort of edit a little bit as I go, and I sort of write. She writes like she's an impressionist painter, and so it's like around in circles, and she'll send me something and be like, it's almost done. And I'll look at it and be like,
Where's this going?
Sister, this is so far from being done. And then like 20 minutes, like 4 more brush strokes, and you're like, oh, wow, there it is. And I don't write like that still, but I learned a lot about writing, like narrative writing, like how to write stories. Because both books were really, especially the first book, we really told the stories of Main Street entrepreneurs. And so we'd lead every chapter in that book with a story, or really bookend the chapter. We'd start with the beginning of the story, leave a little bit of a cliffhanger so people wanted to finish the chapter, then we'd talk about some trends, and then you'd finish the story. And I wasn't very good at that when we started writing. And Elizabeth, who's also a great editor, would sort of like give me feedback on what I was writing. And we kind of write on top of each other a lot, so it's not like I wrote a chapter, she wrote a chapter, like we kind of write on top of each other all the time. But I really learned how to be a better narrative writer. And by the way, to love it, right? I mean, I think when I first started having to do it, I was like kind of just pushing through it. I'd rather read like 5 different economic studies and like summarize them. Like that's an interesting chapter for me. But I really have learned to like love the storytelling aspect. And in this book, we did probably 100 interviews. We talked to people like, Jamie Dimon's the one everyone's heard of. who's the CEO of JP Morgan Chase, Lisa Green Hall, who basically invented impact investing, Dan Schulman, who was the CEO of PayPal, now is the CEO of Verizon. I mean, a lot of people. And not all of them ended up making the book. Some of it just sort of informed our thinking, but many of the chapters talk about their stories and pull from those interviews. And so there's a lot of narration in Capital Evolution as well. And I think that I really learned how to do that from Elizabeth.
Come on, I love it. I love it.
Good partnership. Good. Let's go clap every time.
That's a good place. It's a good place. What about you, Elizabeth?
I mean, so Seth and I have a great partnership, 10 years now, 10 years-ish.
Yeah.
I mean, look, I had been thinking about writing a book for many, many years and never did it until I met Seth, right?
Wow.
Seth is incredibly goal-oriented. And so, like, I can totally get lost in my, brushstrokes and, like, let me just keep perfecting, and, like, well, I'll just wait. It'll get better and better the longer I'm baking it. And Seth is like, pull it out of the oven, let's go, right? And so I don't think any of these books would have happened without that kind of discipline that he brings to me. And then I'm a huge, I have made my whole career writing and editing and teaching writing. And so I really believe in writing as kind of a healing endeavor and a way to figure out who you are, who you want to be. When you choose the words that you put on the page, it's a process that just helps you, it changes your mind, right? Changes your brain. And so writing with another person who is different can really help you progress as a person. That's what I think, right? So sometimes I'll write something and I'll think, I don't feel that confident in it. And Seth is like Teflon confidence, right? So I'll write it and I'll be like, do I have enough evidence? Is it this or that? And Seth will come through and edit it, and I feel it getting stronger as he's doing that. So those are some of the things that I really like about
I will give a pitch for writing in general, which is like, well, one, I just read The Correspondent, which is a lovely book, which makes me want to like start writing actual letters. If I had penmanship, it would be even better. But and I think I'd be curious if you find the same thing, but I'm saying this out loud because it might resonate to other people. Like, I used to think of writing as a bit of as a chore, but when I got into like really writing and writing books, I just, like, my mind is always going in a million directions. And it's a blessing and a curse. Like, it's great because I have a lot of thoughts and ideas, but it's a curse because it's just very noisy up there. And when I'm writing and I like really get into writing, and especially writing books, it gets really quiet. And I think that's why when people are like, are you gonna write another book? I'm like, I mean, yeah, I have to write. I'm gonna have to write another book because it's like the only time in my life when I can, even when I meditate, I'm just like, it doesn't work for me. I mean, it worked for me. Someone finally told me, I was like, I'm totally doing it wrong. Like, I can never, whatever. And they're like, yeah, the point is to notice that, not to not have the thoughts. So that made me feel a little bit better. But even when I meditate, I'm just like, I'm not gonna think about anything. And it's just like, that lasts for like a nanosecond. But when I'm writing, for whatever reason, you just get into the flow state or whatever you call it. So
it allows for you to have a pace that is beyond the kind of the being encumbered with all the worries, and you become present. Mm-hmm. So I love that. I like that you guys both shared, because I wanted to hear your perspective, because when you write the first book, and Seth made this in the interview before that we did, he said that you could kind of tell the difference when each of you were speaking in the book, in the first one, and this one seems more gelled.
I think that's true.
Yeah.
It really is. You have kind of formed a voice together, which I thought is unique. So the question I want to ask about, let's get into this book. When you look at 2025 and 26 America, you've got populism, nationalism, distrust of every institution. What convinced you that capitalism is still worth fighting for, instead of just walking away and trying to replace it?
Yeah, I mean, that for me, it's an easy question. You know, I'm a military brat, so I grew up, had formative years in West Germany. It was still West Germany, and there was East Germany. And my dad was sent to West Germany as part of the Reagan, what do they call it, the Reagan bulge or something, right? Build-up, the Reagan build-up. So he just poured like hundreds of thousands of troops into Western Europe. And I remember that when solidarity was happening in Poland, Ronald Reagan came out and said every American family should put a candle in their window for the people of Eastern Europe who were trying to throw off communism. So I remember that, right? Like young people now who don't, I don't want to sound old, but people who don't recognize the amount of damage that communist systems have done and don't realize that one of the things capitalism carries along with it, usually if we can keep what's good about it, is freedom. That for me is what makes me think capitalism, which is like the economic element that has kept our country free, I think that is worth fighting for.
Absolutely. Do you have anything to add?
Well, I mean, I guess the only other thing I'd add is like capitalism may be like what Winston Churchill used to say about democracy, which is like it's terrible, except it's the best. It's better than all the rest, basically. And I feel like maybe that's true about capitalism. And I think it's worth noting most people in this group are not in this demographic, but for people under 40, more than half don't think that capitalism works, and they seem to be embracing something that's more like collectivism, which has never, I mean, it has never worked, right? So there's lots of forms of capitalism, and part of what we're trying to argue for in the book is that just because we've lived under neoliberalism, like this one style of capitalism, doesn't mean like that's the only style that there is. And so we actually believe we've already moved on from neoliberalism. Now, whether we'll bounce back to it or not, or move to something else, we argue for this thing called dynamic capitalism, which I'm sure we'll talk about in a second, but that's not clear yet, but we try to make the argument in the book that like this is worth fighting for and why it's worth fighting for. There's an entire chapter at the beginning of the book that asks the very, I think, important question of like, is capitalism irredeemable, right? Is it exploitative by nature? Is it bad? And because we want to address that up front, and then move on to okay, well, how does it work, and how are ways that we can maybe make it. How is it not working? How can we make it work better?
It's interesting to see the shift in kind of even Gen Z's angle on why they believe what they believe, and then also we talked about even in New York City with the election of their new mayor and him talking about being an open socialist and how people were welcoming in a different manner than they would be before. It seemed to have less resistance, and that's interesting. So you describe a world where people live in echo chambers, geographic, media, algorithmic, that harden their biases. What made you take that so seriously, and what have you seen actually help people step out of those echo chambers in real life?
You want to take that one first?
You go first. Media, it's good.
It is media. What made us take it so seriously? Well, I mean, I think most people are taking it seriously right now. But I guess I would say what made me take it, we tell this story in the introduction. I have two sisters who are teachers, and also a cousin who's a teacher. So over the years preceding the writing of this book, I was living like in kind of a rarefied space of like working in Silicon Valley. Right now I'm a consultant at the World Bank. I was doing all this international travel. And in the worlds I was living in, people were doing pretty great, right? I was traveling a lot to a number of big cities in the US. Felt like the economy was booming, but I was also hearing from my sisters, especially my other sister who's not here, who's a teacher on the Eastern Shore, of just how awful things were. And it just, it was hard to reconcile like these two realities, and it just made me think there are two or more realities.
I have 3 statistics, but before I say it, I'm just noting the like storytelling, and then I'm like, well, let me tell you about some studies I read. Fascinating. 3 statistics that I usually cite in response to this, because I think they're like stark and they make me scared, sad, whatever the right word is. But they all kind of relate to what we consider the American dream. 70 years ago, if you were born in the bottom 25th percentile wealth, you had a 25% chance of dying in the top 25th percentile. I probably said this when we talked, didn't I? Today you have a 5% chance, right? So economic mobility, it's like literally the American dream. Like that's what we think of as the American dream. Like, hey, you can pull yourself up from your boots. It's not that it doesn't happen, but it doesn't happen nearly as much as we like to think it does, and it statistically doesn't happen anywhere close to as much as it used to happen. So that's one stat. Second is that this generation, sorry, Sophia, is going to be the first generation not out-earn their parents.
Exactly.
Right? And the third stat, which I heard recently, and I was like, wait, what? Is the average age of a first-time home buyer has increased from 29 to 41. And that's not, I always caveat this, like, that's not a value judgment on buying a home or not buying a home. Like, renting's fine, I have no problem with that. But
To have the option.
part of the way you build wealth in the U.S., at least, it historically has been through home ownership. And so when you overlay that on, like, why did people look at someone like Mamdani or Trump for that matter, right? Why did they get along so well in the Oval Office?
Exactly.
They like have the same underpinning ideas and ideology in many respects. Their prescriptions for what to do and who to blame are obviously very different. But you can kind of understand the rise of populism, generally speaking, on the right and the left, when you think about it through the lens of those statistics. And I think what Elizabeth was describing is absolutely true. Like Boulder, Colorado, like everything seems fine. Everyone I know is in technology, or most people I know in technology, entrepreneurship. Like everything's going fine, right? But you get outside of that for just like a nanosecond, and we certainly did in the last book because we were interviewing local business owners, new builders, and that tells a really different story. And I think that's the story that we need to open our eyes to, just generally.
So you made a key point. One of the things that I think was appealing about Mamdani, I told you I didn't spend much time. I don't really like being in the politics as far as, because it's just, it is what it is. But I saw a clip that was viral of all the candidates that were running against him. They were asking him, what's the first thing you're going to do after being elected? And all of them said, visit Israel, except him. He said, I'm going to stay in New York. And I'm like, this seems very common sense, but I could see as a young person that you're watching this and you're saying, okay, he's going to do what he's elected to do. And it just seemed odd to hear the other answers. So I could see why there was appeal in that manner. Another question, let's start talking a little bit about capitalism. So a big claim in Capital Evolution is that capitalism itself isn't the villain, but the neoliberal shareholder first version of the last 40 to 50 years is. For someone who feels thoroughly failed by capitalism, how do you explain dynamic capitalism in 1 or 2 sentences?
Oh.
You have more liberty than that, clearly. But I know you're passionate about it. You got a whole book about it.
Chandra's known me a long time. She knows I can't do anything in 2 sentences.
Exactly.
You take this one first.
You sure?
Yeah.
Yeah.
All right, there are 4 pillars of dynamic capitalism. Absolutely. This is not going to be 2 sentences. So we talk about, like, why is this important? Like, what can we change, right? And the first is longer-term thinking versus short-term thinking. Neoliberalism, to a fault, argued for short-term black and white thinking. We think the world is much more nuanced than that. Milton Friedman thought the world was much more nuanced than that, right? We have a whole chapter where we talk about Milton Friedman in context, why he believed what he believed, how that has been bastardized by people that wanted to use shareholder first, shareholder primacy, a bunch of Friedman ideas to basically excuse a bunch of bad actions. That tends to go away a little bit if you adopt longer-term thinking. By the way, short-term thinking doesn't work for companies. The average half-life of the Fortune 500, here I'm with stats again, sorry. But the average half-life for the Fortune 500 is 20 years, right? So even companies that are like trying to operate for their own self-interest and put shareholders first aren't doing a particularly good job. 250 of those companies aren't on the Fortune 500 list 20 years later. So that's thing number 1. Thing number 2 is create an ownership economy. We like to say create more capitalists, more people who have purchase on the economic ladder in the United States. Lots of ideas on how to do that, but that's a broad category. The third is a role for government, but a limited role for government. On the one side of the political aisle, Ronald Reagan famously said government isn't the answer, it's the problem, right? And neoliberalism really tried to make government fail in every possible way and treated government as the enemy. But on the flip side, I think there's oftentimes a tendency on the other side to just look at government as like government should solve everything and they should be involved in everything, and we take a much more nuanced view. There's also a whole chapter on that describing what we think. So role for government, but a limited one. And then the last one, which we sort of added, we had a 3-legged stool for a while, and then we had to add this last one because of the fucked up things that were going on in the world. But respect for the rule of law. You can't have free market economy if there aren't actual rules, and those rules aren't, generally speaking, applying to everyone. And we're dangerously flirting with not having a set of real rules, and in particular having the rules that exist not apply to everyone. And that ultimately will pervert our market economy. I actually say this to conservative people that I know all the time who are like, defending some of the things that are going on. Like that it's like a lot of the things that are happening are a perversion of the free market economy. You who espouse free markets and
But the
government should stay out of the way, and you're like,
capitalism.
government is being very much in the way right now because they're picking winners and losers in ways that we've like never seen in this country before.
Yeah, we wrote an op-ed in the New York Times in September that talks about this issue. It has the headline, "Trump is copying China. That's a terrible idea."
Yeah.
Yeah.
Essentially, it's about crony capitalism, right?
Right.
And why it's so dangerous.
Can't pick the winners and losers in a free market, can you? So you're critical of Milton Friedman era and the obsession with shareholder value, but you also show that version of capitalism wrote a specific moment in history. What did Friedman get right for his time, and where did extending that logic forward unchanged push the system off the rails? And you kind of touched on it by saying how people kind of piecemealed, they took something and kind of made it for their own purposes, but can you guys answer?
So Milton Friedman really comes out of the of the World War II generation. He was a soldier, right? We figured that out in his biography. And he was part of a group of economists who had all fought in World War II. And so, first of all, I think fighting in general gives you sort of a black and white mindset because you have to believe somebody's the enemy if you're going to kill them, right? But he also was coming after the 1960s, which was a period of a lot of new government programs, and a lot of people rightly, you could definitely make an argument and say, look at the world around you and think that's government overreach. And there was, it had caused, there was turmoil going on in the country. I think for people in the economic space who wanted to see the world through the economics, it was easy to kind of use that turmoil and think about how do we reshape it economically. Now, from a historical perspective, we also see now that was a lot about racism, right? The turmoil of the 1960s and the backlash, and indeed, like the Chicago schools, probably all white men, So these are complicated things, but I think what Milton Friedman got right at the time, do I think he got anything right? I'm not sure. But okay, I deeply believe in freedom, and he really emphasized that thread. I don't think he got very much right, honestly. I think he was too black and white, and I think his ideology was pushed by the wealthy people of that generation. If you go back and look at the history of Milton Friedman, I'm sure his intentions were fine, but he got in an alliance with Richard Scaife, who was a Mellon, the Mellon family fortune. Scaife, thank you. So Richard Scaife bankrolled Milton Friedman's enormous push to make neoliberalism the ideology of the day. And so a lot of that ideology was rooted in these historical power structures that I think they were problematic from the beginning.
I think he appropriately connected economic freedom with democratic freedom. I think that's what you were starting to say, and I think that was true for when you think about all of the guys, they were all guys who came together after World War II to like figure out the economic system. At Mount Pelerin in Switzerland. It was people like Friedrich Hayek and a bunch of other now very famous economists. And I think their perspective on that was correct, right? I think they coming out of their sort of historical perspective on lack of economic freedom, and they equated that as well, their lack of economic freedom with lack of their democratic freedom, and they brought those two concepts together. Now, obviously, economic freedom-ish does exist in places that don't have democracy, right? China being the most obvious example. Now it's degrees, right? It's not completely economically free. I would probably argue that the US is not economically completely free anymore either. But I think something in there was probably right, but pretty much everything else was wrong. Like this shareholder primacy idea was like such a fallacy from its start. One of the things that Lisa Green Hall said to us that I thought was exactly right was like, humans run these businesses. Like people talk about businesses as these abstract concepts, but like they're all run by humans, and humans do things. Even if it's just hey, I'm going to buy my friend's company that's failing because I want to help them out, or I'm going to pay this person more or less because I like them or don't like them, right? You're not always, every decision isn't just seen through the lens of like, how can I make more money? And in fact, statistically speaking, humans make most decisions based on factors other than just economics. And so that has to be true of people operating in businesses. And I think for whatever reason, Friedman just didn't believe that, or wanted to believe that you could sort of overcome that and supersede your humanness, if you will, with this notion that shareholder primacy was all that mattered.
So it's
totally
like
wrong about that.
so like a clinical
Yeah.
diagnosis
You
of
still
it to
meet
take out the
people.
humanity.
You still meet people today, like a lot of economists who think people are rational. And I just look at economists and I think, obviously not. People are not rational, right? We know that now from a couple of decades now of behavioral science. Like we've done better science on how people actually make decisions.
So let's talk about the middle class. You argue that a strong middle class is central to a healthy democracy and a stable economy, even as the middle shrinks and the upper middle grows. What does a strong middle class actually do for a country that nothing else can, economically and socially?
There's a lot. So there's a lot of good theory about this. If you look at political economy, which posits basically that you cannot have a successful democracy if you don't have a middle class, because middle class people demand a certain comfort level,
Quality of life.
Right, they demand a certain quality of life. They want education for their kids. They want to have the freedom to say what they want. They want to come into nice bookstores and buy the books they want, right? And that comes from having enough income, having a solid amount of income. And I also believe societies really only work if you get the idea that your hard work, that you have a shot, right? That it's relatively fair. And that's kind of inherent in the middle class idea.
And worth remembering, there's 165 million people in the middle class in the United States, right? It's like a huge part of our economy.
It's expanded.
Right? And so it's like we rely on, I mean, U.S. economy is 2/3 driven by consumer behavior, not business behavior, from a GDP perspective. So that's just an important group of people just from a practical economic perspective. And what we've done with them over the last 50 years is saddled them with more and more debt. That worked sort of when debt was zero, right? We're in a zero interest rate environment, much less so now. But also there's this sort of stability angle, and I think part of what we're seeing in terms of political instability relates to economic instability, right? Both in terms of the statistics I talked about earlier, in terms of people not feeling like they've got a purchase on the economic ladder in the United States, but also just from the fact that people don't feel like they have a sort of say, if you will, in our economy, and they see a small number of people becoming wildly successful, and I think it engenders this sort of class war concepts that people now then play into, and I think that's a real mistake.
So there's let's touch a little bit about that. So there's the class war angle, but then I've also seen that there's been a trend. I have a 16-year-old son, that's our oldest, and he talks about in their investment club some of the things that they are debating, and there is some blame that is towards the older generations for the economic situation that is here. So they're like, they got all the assets and now we're scrounging for what's left over and the world's messed up. So there's almost a fatalism and a resentment that's being created between what have you seen in this area and how do you think that this needs to be addressed? Because I know the book points out on some of these things, but I think if you flesh them out in this conversation, it's really helpful.
Well, we were talking about it before we started, which is when we don't really, yeah, as you said, we don't get into the generational aspect that much. But I think what's going on is that the younger generation is seeing the world around them and demanding more and not being able to get it, right? And that's been in the U.S. A crisis communications expert mentioned to me a couple of weeks ago, Americans always need somebody to blame. Maybe humans always need somebody to blame.
Need a villain.
Right.
There's always got to be a villain.
We always have to have a villain. So if you're a part of the younger generation, your villain is going to be the older generations.
So assets are increasingly held by older, wealthier households, while many younger workers and founders can't even get onto the first rung. How do you think about that tension between both the boomers and Generation X sitting on assets and younger generations still trying to get their footing in the American ecosystem? What do you think is a way that they can start to fend and build for themselves with these mounting challenges.
We talk in the book about the ownership economy, and I think there are a lot of ideas of different mechanisms for starting to, I don't want to say share the wealth, but or transfer the wealth, because those are kind of loaded words, and that's not what we envision. But if you build more structures that are about growing the whole, growing the entire economy, and then finding ways to pay people more in different forms, I think that's the root, right? I think you have to get out of that mindset of these people have the assets and these people have none, and let's make the people with assets give them to the people with none.
Yeah, I think that's fair. I mean,
Robin Hood?
there's some practical things we talk about in the book around how to incent ownership economies through employee ownership trusts and employee stock ownership plans, ESOPs. So we talk a bunch about that. We talk about 65 million Americans don't even have access to a 401k. I don't know why we don't just give them access to the federal 401k, but they don't have access, so they don't have the ability even to try to save. We argued in the last book and for this book for this concept of like baby bonds, right? Putting in like baby investment accounts. There's a version of that in the BBB that did get passed. So we're going to have, there have been some small experiments with that. We're going to have a large experiment with that. All the small experiments shows that works, but that's creating a lot of mini capitalists and investors. So those are some of the things that we talk about. I was with a group yesterday that works specifically in Colorado on economic mobility, specifically for families and children. And we were brainstorming on exactly this, like all sorts of ideas for how to give people purchase on the economic ladder. And so I think that all of those things are important. And I think it's important. People often ask us like, sort of, who's the hero of the book? Like, which CEO do you look up to most, or whatever? And we often push back and like, there's no heroes. Like, no one's perfect, right? We had a great conversation with Jamie Dimon, all sorts of problems, right? Dan Schulman, all sorts of challenges. Lisa Greenhall, maybe fewer challenges, but still some. And so, like, there's no one solution. It's going to be like a lot of things that enable people to sort of get that economic purchase. But part of it, I think, Andre, also is like, we've got to get out of the zero-sum thinking. I mean, unfortunately, right now, our current politics is all about someone wins at the expense of someone else. There always has to be a loser. We're always cutting deals, and that deal looks like I win, you lose. And that is, I think, a terrible mindset, and it breeds this grievance politics that we're in right now.
The politics of grievance. I thought that phrase was well coined in the book.
And I feel like that, like, that's not I understand that's not a practical, like, here's the policy thing you can do, but like, we've got to get out of that, because like, we need to grow the pie, not, I mean, we can talk about how to divide the pie a little bit, but like, we ultimately need to grow the pie, right? We're not
that it's more an analogy of a bakery than it is kind of this just, if it's a garden versus a bakery, there's zero-sum thinking, because every time you consume, it's gone. But if you consume and it causes production, it's a different mindset that can lead to abundance and probably more solution-oriented thinking that's not people fighting or stepping on each other.
And my perspective on this, by the way, is just I mean, my day job as a venture capitalist, like, I see the unbounded upside, right? It's not like when one of our companies succeed, another one fails, or that there's like some magic cap to the company, to the company size, right? That doesn't exist in that world. And so that's like completely shaped my thinking about, like, there is an opportunity to do things differently and actually create more success for everyone, rather than think that we need to take from this group to give to this group.
So there's also, you guys had in your chapter, I think it was about chapter 12, you were talking about, there was a controversial TED Talk with a young man about
Coleman Hughes.
Yes, there's also the American story of being colorblind at the same time, that there were whole communities that were kept off the economic on-ramps through redlining, school funding, and lending practices. How do we design real on-ramps for people who've had structural stumbling blocks without reducing them to victims on one side or villains on the other?
Yeah, it was a great question. And this is a lot about what our first book was about, explicitly. I mean, I think it's pretty, so first of all, our realm is business and entrepreneurship specifically, and actually small business ownership, along with home ownership, is one of the paths toward mobility in the economy. And it's one often seized on by people who are excluded from some of the ladders that the sort of the white patriarchy controls, right? You can't get a foothold on that ladder, well, you're going to go off and build your own ladder. And so a lot of where we come from on this is the idea if we empower more entrepreneurs, that we'll be doing a lot of good in that zone. It's not the complete answer. I think there's other ideas too. And I think some of the ownership economy things we talk about in this book are important. But for entrepreneurs and for enabling more entrepreneurs, it's basically a lot about just capital, right? Figuring out how to get capital to entrepreneurs. More capital, more easily.
Yeah, I think that's right. I want to give props to Jewel because that's what your business is working on doing. I also started a fintech business. It's different than what Jewel's doing, but that is also trying to bridge this gap and find ways to provide more financing to new builder businesses, which I think is important. That chapter was an interesting chapter to think about and write because what we talk about in that chapter is how we often in the U.S. sort race over class, right? And what this young TED Talk guy, Coleman Hughes, argued for was that's not always the right lens, right? And that actually two people in the middle class, regardless of their ethnicity or race, have more in common likely than two people of the same race, but in very different classes. And that was super controversial, right? And he got taken, he happened to be a young black man, which I think probably was helpful for him to be able to say these things. But his video was taken down on TED and then eventually put back up. It actually probably worked to his favor because it made him, he has a really good podcast, by the way. I listen to it all the time. But it became really controversial because people didn't want to hear that, right? And I think that what we argue for in that chapter is not like that race doesn't matter or ethnicity doesn't matter, but that we have to recognize class. And we tell the story of, in particular, this white man who grew up sort of very kind of not even really middle class, lower class, and sort of how he viewed his upbringing with a certain amount of shame and how hard it was to pull himself out of that. And so we describe why that's important and why we shouldn't take for granted this notion of class. And by the way, I think Trump played into that, right? And again, if you look at like what his coalition looked like, he had a pretty broad coalition when you look at it from a ethnic standpoint, racial standpoint, certainly more so than prior people who ran on the Republican ticket. And a lot of that is explained by class.
It's amazing to see the kind of the shifts that have happened over with the tide of America and why certain messages resonate more. And if you could speak, we were trying to figure this out in a barbershop conversation. I was telling Seth this about when Trump first got elected. I remember that the question was asked, the lead barber was saying to the other barber suspiciously, he says, all you guys say you don't like Trump, but the numbers aren't adding up. And he was like, some of you guys
there's 10 guys
Trump.
in here.
And he was like, and he goes, look, I don't want to judge anybody. He said, I just want to know why. Like, give us the reason why.
Yeah.
And so one barber speaks up who was from Ohio, and he goes, I'll tell you why people vote for him. And he started explaining. He goes, when I moved, this is when I lived in Seattle. He said, when I moved out here, he said, you have a ton of all kinds of social programs and things. When people are unemployed, you can do well in the gaps. And he said, when you're broke where we're at, you're just broke. And he's like, people who can resonate and talk to people about economics, he said a lot of factories were gone, a lot of the jobs, a lot of their industries were crushed through the deals that were made. So he was saying, I know why it resonated with people. So I think it's interesting, the tides, how they've changed and why certain things are resonating with people.
Can I just add too, I feel like there's some kind of element of like masculine appeal to Donald Trump, and you cannot, like, it hardly ever gets talked about, but there's the men who are not hiding their vote for Donald Trump are usually like super sexist and super patriarchal, and right, he embodies this kind of like superiority of men over women, right? And that I feel like that's one of the conversations that is getting lost in our current moment. It's not part of our book, but it's just want to bring it up.
So in both books, I want to talk about both books. Across both books, you lean hard into ownership, employee ownership, broader stakes, and what you call ownership economies. From everything you've seen, what's the most promising ownership model that actually shifts power and security for workers and communities, not just branding?
We might differ on this one.
Yeah, go for it.
I mean, I think there's a lot of great ideas, and one of the main, what I love about this book is that it's really about opening the conversation and helping people understand that they have more agency in the economy than they might have felt that they did. But I think actually financial education and getting people to invest more, it would be the quickest and easiest way to help people get that sense of ownership in the economy. Why don't they invest? I mean, if you look at the state of financial education in our country, it is rock bottom. It is so poor. Like my kids went to a big public high school in Alexandria, Virginia. They spent a lot of money on education, and they came out with some huge misconceptions about how you grow a healthy financial life for yourself, right? Like credit and debt, which are a part of your financial life, but they focus a lot on, like that's how our whole system is running, on credit and debt. And so they emphasize that in high school right now. I don't think they really teach budgeting at all. I don't know. Anybody who has had
Home
kids,
economics is gone.
It's
It was,
gone, right?
It was the tail end.
yeah, I mean, this is like not a difficult fix, and I don't understand why we don't do it.
Yeah, no, I don't disagree with that.
Okay, yeah.
So I think that would, I mean, if I could do one thing to change, like, longer term, the trajectory of sort of the U.S., I would change how we fund education, probably, right? And behind that is the idea that we would not necessarily fund it more, but at least fund it differently and more evenly. But I think that's the way you get purchase ultimately on the economic ladder. Now, that's a much longer term kind of solution. But I guess I'd add to that, there are a bunch of really creative ideas for how to incent broader ownership. We tell the story of a guy at KKR, which is a big private equity firm, not exactly known for being, in fact, known for not being particularly egalitarian, right? Barbarians at the Gate is like literally about their takeover of Argero Nabisco in the late 80s. But they started experimenting with these ownership models that were really, really interesting. I think it's no surprise that the guy that decided to do that, Pete Stavros, who's now actually, we talked to him sort of before he kind of blew up, but he's been like on 60 Minutes, and everyone's like, Pete's the, whatever, because it's working, right? And KKR, and by working, I mean, like for KKR, it's working, they make more money, but also it's working because a bunch of employees at these manufacturing businesses, which is the division that Pete works in, are also making like multiples of annual salary when their companies sell. And so I think there's lots of interesting ways to incent that. From my perspective in Silicon Valley or in tech entrepreneurship, we do that with sort of every company. And it's a bit of a point of pride, I think, for most tech businesses that they share ownership across those companies. And I didn't realize until I dug into it that actually is not common. Like that as common as it is in technology, it's not common anywhere else. Now, not every business can do that, and it doesn't necessarily make sense for every business. And so I recognize there need to be some different models as well, but that is a way to, I mean, a lot of people, more than half our working population works for a larger business. That is a way, and it used to be much more common, right? We don't think about JCPenney, Sears. There were a bunch of companies that used to be much more sort of employee ownership driven in some way or another, right? So we got away from that primarily in the 70s and 80s. Kind of blame Jimmy Carter, to be honest, for some of this stuff. Like everyone blames Reagan, but it was Carter who changed the FTC, and that was the kind of like the first domino that started us down the path of sort of the merger craze and greed is good and all the things that we think of as Reagan in the 80s, but it really, really started with Carter. And again, I think for good reasons, right? I think he was trying to, there was rampant inflation in the 70s. He was trying to bring down the cost of goods. And he thought scale would do that, and it did to some extent, right? I mean, it's also the reason that we outsourced so much in the 90s. And again, that's some version of that was probably not a bad thing to do, but we just sort of went crazy with that. We obviously saw in COVID some of the challenges of
Oh, my
that. We
goodness.
see now in terms of critical infrastructure, some of the other challenges of that, and wanting to maybe
What do
bring some of that
Americans
back.
make was the question that was
Right.
emerging.
I know,
It's like,
remember
we
that?
get we
Yeah.
don't, what do
And
we
you had, like,
have?
people trying to sew masks and,
Yes.
yeah, I remember.
Yeah.
People had to
exactly.
make their own industry. So both of you guys argue that business often wields more day-to-day power than government. If that's real, what responsibilities do business leaders have beyond the shareholders to the broader household of the country?
I mean, this is really maybe the central question of the book, right? The back says, after these decades of neoliberalism where policymakers really took the attitude government was the enemy, government really has reduced power in our society and our culture. And so what's left after that decay of institutions are that businesses are some of the few remaining functioning institutions in the country and in the world. So I think what we highlight in the book is there are a number of business leaders who do argue for a greater responsibility, but they generally leave it up to individual CEOs to decide exactly what that responsibility is. And I think that's where I am too, right? I don't want to impose some kind of like, this is how a business should act. I think we're better served if people are making a lot of decisions, but if their decisions add up to a norm where businesses have more responsibility.
So do you believe more in highlighting the examples of the ones that are working well, or what are you suggesting as a kind of
Well, I do.
a day-to-day to
yes.
kind of make it spread of what
Yeah.
you're proposing?
I
How
do
do you?
think that, I think business leaders, this is a big element in the book, right? Business leaders should be able to talk more about what good they're doing and about their greater responsibility to their communities. And right now, I think there's this mindset of my only job is to earn profits for shareholders. So they're doing all this stuff, but they don't talk about it. We also can't really hold them to what they say there because there's just no transparency, right?
And sometimes there's a fear.
Right, and sometimes,
Yes.
yes.
In the current state, you're afraid to say what you're doing because you may have a target, the target on your back. If you are a large company with deep pockets, then
Yes.
there's some fear in that. I'm an employment lawyer, so there's a fear of talking about what you're still doing DEI, what you're still doing, even though the company believes in what they're doing. You don't necessarily want to be targeted.
Bring the attention onto yourself.
Someone described it as the eye of Sauron for the Lord of the Rings fans. Someone described it to me this way the other day, and I think that's true. I mean, Larry Fink told Elizabeth when she interviewed him, we put the story in the book, like these things have been weaponized. And by the way, that was like 3 years ago when we interviewed him. Right now, at this point, like I can only imagine what he would say now. Right?
Right,
And then
even more
truly,
weaponized.
up until today, we were like, and Jamie Dimon's done a pretty good job of avoiding that. I don't know if you saw Trump just sued JP Morgan and Jamie Dimon for $5 billion. I clipped it and sent it to Elizabeth because we had just had this conversation the other day. We're like, Jamie's done a really good job of staying out of the whatever. And I was like, that didn't let half-life of that statement was pretty short.
Yeah.
But we do talk a lot about values versus politics. And it was Jamie who actually kind of gave us this idea. And I kind of thought it was BS when he told us. And we pushed him pretty hard on like, what does that mean? And aren't values, politics, whatever. But I've actually come to appreciate like companies can express values without necessarily being overtly political. And I think that's not unreasonable for us to expect from businesses. And as a consumer, we have the power to vote with our wallets.
I think
that's
that's been the eye-opening thing that's happened with companies is that they're over-indexing on one way, and then they find out with the pushback
And then
what
they-
happens as a
right.
result of when people shift and they say, you know what, with our dollars, we're voting against this because of that. Or this is what we cared about most that the company delivered, which I think is interesting.
It's so funny to me, by the way, that like the investor that we all look up to the most, at least in my generation, is Warren Buffett, and he's like the value. Like he talks about this all the time. It's so interesting, right? He talks about it in his shareholder letters, he talks about it in his annual meetings, and everyone hangs on every word of that. And if you read JP Morgan now, if you read BlackRock, Larry Fink, like all of their CEO letters talk a lot about values, purpose, things like that.
I
And
want
it's
to
interesting.
say too that the one issue here is definitely the media, which is in a disarray at the moment. But even like the past 50 years in the media, because of the way the media profession grew up, was really centered on the idea that government was the main actor in society, right? Journalism as a profession grew up after World War II, when in fact government was the main actor in society. And so when I went to journalism school, if you were like a top journalism student, you became a political reporter or government reporter, and you were digging up like dirt on companies, right? The companies were the bad
The
guys.
exposés, yes.
And I still hit that. Like, I still find articles written by people who are trying to make a name by turning a company that really was not doing anything wrong and just doing something wrong. Now, there is plenty of misdoing in the
You're just
business
saying
world.
that the hit pieces are that kind of, let's make a name by
Yes,
destroying a business.
Yes, and then not being able to have the chops, what we call in the journalism business the chops, to like understand business models or capital flows, so that you can write in a nuanced way about the breadth of actions being taken by businesses, right? The best journalists in the country know a lot about the government and next to nothing about business.
So you connect the erosion of security and mobility to the rise of, the populism and to communities that went from industrial work to opioids and despair. How do we tell the truth about factories leaving, drugs, guns flooding in, kind of incentives that undermine family stability without collapsing into fatalism or nostalgia?
Oh, Lord. It's a dark time right now.
Yeah.
Are you asking us if we're optimistic or pessimistic?
Yes, I'm saying where do you fall on the spectrum? Because some people are very dystopian and some people are the utopia and then others are indifferent.
We are definitely optimistic.
Yeah.
And the book is a
Yes.
I don't want to say it's light, but it's an optimistic view about what the potential future could be, but a little bit of a warning that like we're not necessarily going to get there. We should learn from the past, right? And we should learn, people often ask us now, like, well, like, is AI in the book? Like, not a lot, in part because, like, we sent it to the editor, we, like, put the first draft to bed October 31st of 2024, right? And we had a chance to edit through, like, June of 2025, and we were like, we can't write extensively about AI because it'll all have changed by the time it comes out in December, when it was published. But we get those questions a lot. We do talk about like, hey, there might be some learnings from what we didn't think about when manufacturing gutted communities and gutted jobs that we could apply to AI, or at least understand what happened and then what moved in. And you're absolutely right? We did a very bad job of worker training and we allowed opioids to be, and there's a longer story around that, but we allowed opioids to sort of work their way into many of these same communities. And we talk about how the average life expectancy in the US actually went down for a while because of the opioid epidemic, right? Which was primarily centered in sort of Midwestern white men, right? And some of the challenges we have there. We don't talk about it in the book, but one of the other things that is somewhat related to that is we are below replacement birth rate in the United States, right? So, which is extremely dangerous, especially if we're going to shut the borders down completely. And so, we can last a little while with that, but we can't last generations with that. All of these things are related. They relate to economic mobility. They relate to things like if your average age of buying a house goes up to 41, this is one of the reasons why people in the sort of the current generation are either not having kids or having kids much later and therefore having fewer children, is because they don't have the economic capacity to do things like buy a house, which creates, at least in many people's minds, more stability to then have that family, et cetera, and fewer people are even getting married. So it's all these things end up being interrelated. All of that said, we're still pretty optimistic about America has this weird way of we've had tumultuous times before I just read the Aaron Sorkin book, 1929. That was super interesting. It's a little long, but it was good. And so talked about that era. Obviously, the 60s were a very, very fractious time. And so we're going through another one of those times. There's an incredible book called The Fourth Turning. Sorry, I keep mentioning books other than ours, but I read a lot. But The Fourth Turning is really interesting, and it talks about how generations don't build upon each other, they build in reaction to each other.
Mm-hmm.
And we go through these cycles of 4 generations,
Neil
and we're in the
Strauss.
4th turning right now. And they actually, that book predicts the rise of an authoritarian leader. I'm truly, it was written in like 2000, and I kept looking back to the cover plate to like just double check that it really was written back then. Because I probably read it 4 or 5 years ago, and I was like, wow, this sounds really current. So they're like the 4th turning is followed by the 1st turning, right, which is a bit of a rebirth. So I do believe that the reaction to what's going on now will ultimately be positive.
And I think the trick is like to get involved in what you can do to rebuild the system in a better way. Because there's either going to be a lot of destruction in that transition and a lot of pain, a lot of heartbreak. I think it's inevitable there will be some, but the degree of that and the extent to which we protect each other and protect vulnerable people is really up to us. The transition is going to happen. Do you sit it out, or are you
part of the builders, the new
Are
builders?
you a new builder? Yes.
I have
And by the way, I think it's really important to say this because like there's a lot of hate in the world. Like I think you combat hate with love, not with hate. I
Absolutely.
think that's really important. And it's hard sometimes when I see the things I see on social media and things like that, and hear from I went to college in St. Paul, so Minneapolis, and I hear from a lot of friends there. But I'm trying to keep that in mind.
Absolutely. My final question for you before we open it up for Q&A, because I want the people to engage that are here. We got this beautiful crowd. Clap it up for yourselves. Thank you for making time in a snowmageddon, supposedly.
Armageddon. Oh my God.
Not even a flake. This is
Not a
Georgia.
flake,
I know.
it's
I know.
Georgia. For the people in this room who are tired of culture war scripts and labels and just want to build, whether in trades, tech, or a small shop, what's the first mindset shift you hope Capital Evolution gives them?
I think being open actually is like the first thing, right? Being open to talking to other people, being open to the idea that we are in a transition period, being open to people who are different than you are. I haven't put this out yet, but I put it in my newsletter recently, like 12 or 13 years ago or something like that. I was a single mom recently divorced with like 2 months worth of mortgage payments in the bank. And I've gone from that to writing a best-selling book about the economy. And I think, but I think the way that I did that, I was open myself, but I also met a lot of people who were open to working with me, including Seth, right? I used to bring my daughter Quinn to Seth's office, and there are executives and venture capitalists who would have been like, not cool. And, Seth just engaged Quinn in talking about her toys and her
Tasmanian
devils.
Don't even get me started on Tasmanian devils.
She had a big love for Tasmanian devils for a little while. So I just think being open, giving people, a leg up, I just think that's where it starts. Yeah.
I love that. I think about the world in terms of like give first. So I think that which is what how we describe. I say we, like sort of this Boulder community that I grew up in. Particularly my business partner, who's a guy named Brad Feld, who just wrote a book also titled Give First, but about like how can we help others, right? I feel like when you lift others up, you get lifted up yourself. And I feel like, again, we just like have gotten away from this in our economy, and I think that used to be much more a part of how our society operated. And so I think a lot about that. My wife's a small business owner. She's a real estate developer, but she also owns the bookstore in our hometown, so yay books. And I think a lot about like sort of her lens on the world, like how she's trying to get our downtown community, which we don't live in Boulder, we live in Longmont, which is as big as Boulder, but it's a very different place in terms of its, in particular, socioeconomics and like how she's working in our community to try to build all businesses up. I think is really it's a powerful instantiation of kind of how I like to think about how the world could and should work.
I love it. I'm going to open it up for questions. I want you to share, though, that anecdotal story about what you did for the holidays with small businesses.
Oh, well, so we're very invested in our hometown, and so my wife and I did essentially all of our holiday shopping on Main Street in Longmont. which was super fun, right? Just like shop to shop. And one of the things I really like doing when I am in a store is to talk to the owner if they're around, Kate, because I love those stories. Like I feel like my job is to be like a cheerleader for entrepreneurship and entrepreneurs, and I think many of the most powerful entrepreneurs in my experience have been small business owners, which is in part why Elizabeth and I wrote a book about small business owners. And so that blended two of my favorite things. So I got to go from shop to shop, I got to shop local, which was really fun, and I got to talk to lots of store owners. And of course, we're on Main Street in my hometown, and everyone knows my wife there because she owns like 5 or 7 buildings on Main Street and owns the bookstore. And so that was really fun to get to engage with everyone. So highly recommended.
Love it. So we want to open it up, give some time for people to ask. Clap it up for that.
And for Andre, thank you.
Absolutely, I'm glad to be here. Let's have some questions. What are some of the thoughts on your mind as you hear us discussing capital and kind of the economy and what's going on in America? Go ahead.
I was just thinking about, I'm in the private equity space and venture capital. Where do you think the role of those institutions are changing in the new economy as you're thinking about it? Like, how do you see that role? Like, how do they help it to come to fruition, I guess?
I mean, I would love your view on this, because I've been in venture for 25 years. I feel like we experiment at the edges of it. And like the stuff that Julie's doing is I'm super psyched about, right? Which is like this idea of it, like a slightly different way of investing, a different form of investment. But I feel like the core venture, like when I looked at a statistic recently, the top 10 venture firms have like 80% of the money. Right? Andreessen just raised, which is a big, well-known venture capital firm. By the way, it had crazy good, I kind of always had in my head that maybe they had sort of traded performance for size, but they hadn't, right? When you see the numbers. And it's incredibly concentrated. And I'm a little skeptical about the venture business ever really changing. Like we had a moment in 2020 when there were a bunch more diverse managers, and it felt like, and there were more emerging managers of all types and in different places, and I thought maybe things are changing, but that was a really bad vintage, right? Meaning a really bad time to be investing, and so a lot of those funds were first-time funds and they didn't do well, right? And a lot of the platforms that were established to support those founders, I work with one called VC Include Ventures, and I just got a report from them yesterday that like just a lot of those firms aren't working. They're not able to raise their next fund. They're trying to consolidate. So I just don't think that those traditional capital structures are likely to change and change quickly, which is why I'm so interested in other structures that are like adjacent to, but not necessarily directly in those kind of mainline venture or private equity, which is what I'm trying to do with my business, and I think my lending business, and what I think others are. I don't know what your perspective is on that, being in the business as well. But.
Well, I'm on the operating side, so it's like I actually focus on the people side of the business, so it's like I'm working with the owners. So it's a little bit, so I get to kind of work in it from that angle, which is really helpful because I get to bring different diverse people into the portfolio.
Yeah.
I think you're right. The vintage was tough, and I think that also people assume that that's because of what we did back then to make differences, but it's not. It's the vintage. So I don't know. I don't know the right answer on that.
Yeah.
I think different vehicles make sense.
And by the way, there was pushback to it. Fearless Fund got sued and ended up settling. I understand why they settled, but that didn't help. And so I think there's some things that there's some very powerful forces that are pushing back against change in particular in venture and private equity.
So I could just add maybe from a really big picture perspective, 2 things. So I used to interview Jack Bogle, who's the founder of Vanguard, very often, and he kept a copy of the poem Ozymandias by Shelley on his wall, and he had it by heart, right? It's about an Egyptian king who built a monument to himself, and a traveler comes upon it, and the monument is turning into dust, right? Which is maybe Mark Andreessen should have a copy of Ozymandias on his wall. Maybe I'll send it to him.
I was going to say, I'll send it to him.
So that, right, you can't, it's easy to be in a spot and say it's not going to change, but things always change.
Yeah.
And I think the mechanism if there is a mechanism for change underway, it's probably making private equity an option in retirement plans. And right, there's definitely a movement to increase individual investors' ability to invest in private equity. And that, I mean, yes, very wealthy people are very powerful and they have their structures, but the power of the people historically often overwhelms the power of the institutions.
You guys mentioned earlier about how home ownership is obviously a big component of wealth creation. And then you have private companies or public companies out there buying up all the residential properties like BlackRock, buying all these properties, you know, and then obviously that pushes prices up. What are your thoughts on regulation for big businesses that are impacting the common person's ability to accumulate wealth because of their greed?
You want me to take it? Okay.
You take it.
Well, I'll give you one half of the answer, which is I fundamentally I believe the solution is in enabling building more houses, right? And if you look at some markets where there was a lot of housing built, even though a bunch of it was built by larger corporations, prices for both renting and buying have gone down. Right, and that's actually even true a little bit in Denver, but it's definitely true in Austin, a couple of other, Charlotte, a couple other markets. And so I think from my read of the data, and I haven't studied it deeply, I think the solution lies more on that side rather than sort of preventing certain types of businesses from building in the first place. Because I think where we've seen the price of housing, either rental or purchase, increase, regardless of whether there's corporate ownership or not, have been where it's just really hard to build.
I don't think they're building, they're acquiring existing property.
Yeah, I think they do both, right? But even in the markets where there is concentration of what you're describing, because my initial reaction was like, yeah, we should limit that a little bit, and there's some markets that have had big debates about like how many Airbnbs can you own and things like that. And I actually don't mind, like local communities should 100% decide what their community standards are and decide, hey, we don't want short-term rentals, you know, either at all or owned by, you know, companies that own more than X number of properties. Like that I think is totally fine. I think when it comes to sort of owning large rental properties that are longer term rental properties, I don't feel like restrictions on the ownership side are the problem, because no one has market pricing power. Like no one's big enough to have that market pricing power. So I think the solution is how do we enable building more housing? And from what I've seen of the data, it suggests that those cities that actually have enabled more building, and Colorado has pretty high housing prices, but we're doing a better job now of enabling more housing to be built. And by the way, Longmont, where I live, versus Boulder is a really good contrasting example, because you can't build anything in Boulder, and Longmont is, you know, has more sort of reasonable, in my mind, building restrictions, and the price of housing is significantly lower. It's why my wife and I moved there 20 years ago, because we were like, we can't really afford Boulder, but here's this other town that seems like it's got a lot going for it. So I don't know if that answers your question. That's my view of it, but you know, I may, and my read of the data that I've seen so far is more on that side.
There's actually a tech company I just came across, headquartered in DC, that's working on like a way to help individuals invest in building houses by
tokenization.
So it's
Sort of, but yeah.
Yes. But I just think there's also innovations that are going to be here that have to do a lot with the way capital flows and ownership and investment, and embracing those is a good idea.
There just seems to be
Great
a
answer.
pivot towards rental versus ownership.
Yeah.
But yeah.
And by the way, some of that, I mean, again, I don't know this sort of countrywide. Colorado has a law in the books that basically prevents developers from building essentially condos for sale. And so I guess it was I think it made sense sort of to some people at the time, but if you look at what happened in the 1990 when it was passed, it wasn't that housing starts went down on multifamily condos, it went to zero. Like it literally was like one day you could build and the next day it could only be rentals. And it's really interesting to see that trend and realize like, okay, there are some government interventions, and again, I think it was probably done for a reason that seemed rational at the time, but that had a consequence that was there are no, and by the way, condos are a really good first step to home ownership for people and young families getting onto the sort of home ownership ladder, and we gutted it in Colorado.
I just would say, I think also just in my experience and being around young people kind of in the early 2010s who saw many of their families lose their homes in the recession, that the change of what we defined the American dream of having this home, and they saw that disappear, and they saw the anguish that created within the family. I think that the goal of having the home really changed also because of the recession. It just infiltrated really that generation.
It's a great point, right? So there's some emotional healing that needs to go on for this generation to even think about taking the risk.
Exactly.
Right. Yeah.
I'm seeing a little bit, given my age, the flip side about condos or in terms of home ownership. As our parents are getting older, they don't want to have a home, a single-family home with all the maintenance and so forth. They want to buy a condo because they still want the investment, the growth of the mindset. But if you can't only rent, that's going to, my mom's 78 years old. That's not part of her vernacular to rent a place. I would not. And so I think it can be on both sides. It's a wrong coming up, but it is also an option on the way downsizing and so forth.
I'm almost ready. Almost ready.
Especially if you think about traveling and doing other things in the next phase of your
The
life.
3 dogs are not going to fit in the condo.
Yeah, the donkeys and the dogs and the goats make that a little harder,
But I've been to your house. I don't think you're ready to do that.
not quite ready.
Not quite.
I mean, I do think, if you look back at post-World War II and when we adopted the idea of home ownership as a societal goal, which I think maybe everybody in this room would agree, it was a good thing, right? First of all, it gives you, it's just a good thing on many. So getting together and doing that emotional healing maybe, and talking to agree as a community, hey, we do want to figure out ways, smart ways, with capital or with education to incent home ownership. That's a great, coalesce around that goal.
Yeah.
People don't want it synonymous. It seems that the people don't want it synonymous with kind of the instability, because if the goal is to get it for stability, and then it's, these circumstances set it up to where it's not such. It's challenging for people because they think it's more traumatic to have it and then to lose it than to have not had it at all.
Yes, you're right. Fear of loss is a bigger motivator than joy of gain.
I think it's a metaphor for the middle class in general, had it and lost it.
Right.
And now are,
Yeah.
going much.
Yes, exactly.
That's really
Yeah,
right.
no one told us when I was 23 about my first condo. They were like, oh, you buy a house and it just goes up in price all the time. No one told me 2008 was coming and that changes things.
Yeah.
Or anything about adjustable rate mortgage, which is also not, or interest only loan.
Back to financial 101
Financial
in
literacy
high
in
school, right?
Right,
Minus
yeah.
due and showing.
Yeah.
Yeah.
There was a question in the back too.
Yeah.
Hi, I worked in a small business development space, and back to capital, Elizabeth, you said something earlier about the drive to create more entrepreneurs. I hear that a lot, and I kind of bristle because just creating more entrepreneurs without the technical assistance behind them sometimes will lead to the fear of loss of a home, lose a business too. So I think there has to be a commensurate increase in technical assistance to make sure more entrepreneurs succeed.
Yeah.
So,
I really agree with you. I just wrote a story on Forbes about a program in New York City that gets volunteers from big companies, big investment firms like Wall Street firms, to come and help small business owners with really basically dealing with the tech platforms, right? So they help them set up spreadsheets and help them do the analysis on inventory and management, stuff like that. And I just thought, this is great, right? I've known about, what is it? What's the big one from Score for a long time. And this just seemed like a more specialized way of addressing what I think are some of the big issues for small business.
We talk about that a lot actually in the first book, in The New Builders. One of the organizations that we met in that book and that we've both been involved with now is Entrepreneurship for All, which is trying to do, we do such a good job at this in tech. with all these incubators and accelerators and all this kind of stuff. And I was part of the founding of Techstars and getting that going. It started in Boulder. And, but we haven't done that. There are not as many equivalents of that for small businesses, Main Street businesses. And E4All is trying to change that, for example, as one example. Now, that's hundreds of companies a year, not thousands, but it's a start, and there's a couple of others. So, no, I totally agree, and I think, it's absolutely one of the things we argue for in the first book, which is, hey, we need to provide some support, network, know-how to small businesses as well.
It's funny you should bring up Techstars. They have an outlet in Alabama, and that's one of my clients is a graduate of that.
Okay.
And he said, essentially, once you get out of there, it's like, hey, good luck, So
Yeah.
ongoing support to, to help these businesses continue to grow.
Yeah, that's fair.
I think it's about, relationship building for those. We've written about that a bit too. Well, I think that is a totally fair criticism. A lot of those programs that they do not provide the ongoing support.
It's interesting, in my lending business, Goodbread, we get asked this a lot, and we're small, so we can't afford to do it, but we've been thinking a lot about, like, how do we provide some sort of platform for ongoing support for the businesses that we make. That business makes loans to businesses, not to startups, but to businesses that, like a bookstore that's been around for a year or two. So I totally agree.
I have a heart for community and keeping communities intact. And there's this thing called gentrification. And I always think about de-gentrification. And I asked myself, if I was independently wealthy, is there some kind of way where I could formulate a hybrid where I could allow people to age in place, keep their homes, and as a builder, be able to maybe share the ownership with them? I don't know how that would work.
It sounds
but
like
I
a
always
cool
think about
idea.
These people can still maintain a portion of their ownership. We can somehow share. I don't know what that exit looks like or what it looks like in terms of passing it down to their children. It's not a fully baked idea. But I just wonder if there's a way to keep the community intact and share ownership in some kind of way.
We've been experimenting with some models around that. I'm on the investment committee for a foundation in Denver called Gary Community, and our entire mission is to support children and families in Colorado. And we've been experimenting with some of these ideas around how to either let people stay in place or these sort of rental things that are actually more ownership based, or I'll have to think more about this specific question, but I think it's a really good one.
Yeah, I think there's also, I just want to make a broad observation. Is so far at all of our events, it turns out that people have so much expertise and so many good ideas, and in fact are thinking about the systemic flows of capital, right? Even if they're right. I'm really happy to be creating space for that conversation.
Yeah.
But I think there's also Stillman College in Alabama was working on something along these lines too, right?
Good to hear.
I just think there is stuff bubbling
That's great.
in that space. Yeah.
That's awesome.
One last question before we close out, because I want people to have time to get the book, because the book is worth getting. It's a great book. It's a great read, and I know that this conversation needs to continue on. So, any other questions?
I have one. You mentioned like financial literacy is like a problem for the next generation, like a long-term problem that you're thinking about. What's leading to that? Because like anecdotally, I talk to teenagers. They have access to so much information. They seem to be so smart. Maybe it's just the bubble that I'm in, but when I have conversations with them, I'm like, how do you know this level of detail on these topics? Because they have access to so much.
Financial topics specifically, or
financial topics.
Okay.
There's so many gurus out there, and they watch so much YouTube, and once you start getting in the algorithm, you just get more and more, and you learn more and more. So I'm just curious. It was kind of surprising when you said that. It's at an all-time low with the access to information. So what's led to that systemically, do you think?
Am I allowed to offer half an answer?
Yeah, teacher. Yeah.
Yeah, so high school teacher of both like some of the top kids in Georgia, going out to do research as high school seniors, and some of the lowest kids coming from very underprivileged backgrounds, moved here and there, aren't even literate. It's really complicated, but kids like you're talking about are in a silo of information. And so they sound like they know a lot, and they can regurgitate a lot. And some of them actually do and are really great thinkers, but a lot of them aren't actually understanding what they're saying. And they're just understanding a top of it. And I will say across the board, even with some of my smartest kids who are taking third year Georgia Tech calculus as juniors in high school, don't actually have, well actually that's not a good example. The kids taking AP calculus. They don't actually have a good understanding of large numbers. Like they cannot conceptualize 10 versus 100 versus 100,000 versus 1 times 10 to the 9th. Like I still show a movie from the 1970s that starts with a picnic on Lake Michigan, and every second it goes out by a magnitude or order of 10. And then it goes in, down to like, it's so old, you could go so much further now, but even the Magna kids are like shocked. It's only like 9 steps and you're out, and Earth is just a little thing. So that understanding big numbers and small numbers, what a billionaire really is compared to, you know, me, and I actually am kind of, I'm probably top 10%, not near the ones, but they don't understand.
So at a
that.
macro level, they just don't really understand the numbers. They just have like sound bites from,
Correct.
you know,
And they-
shorts that they watch on YouTube, but they
We're
don't
not
really
doing a
understand.
great job of teaching them to think
Yeah.
in high school. Like even I taught in high school when I was starting a business, then I went to the business, did engineering, and then I came back. And in that span of 7 years, the skill and thinking of those kids is dramatically different. And yes, COVID's a little part of that, but it's not really COVID. They're not accountable for themselves, their attention span is lower, they're on social media.
Chandra and I were just talking about this.
It's-
Yeah.
I used to do a Socratic seminar, and is we will change in the way we think. And I used to do that with kids who still read books because iPhones came out when they were like 11. And they used to actually pine for the days before they had a phone. Now that same Socratic seminar, the kids are like, oh, it's not. This is just how I think. Like they don't even know what it was like before phones. But we just instituted a phone ban. And I have to say, it's been amazing. Like kids are reading, they are talking to each other. Yeah, so I answered your question in a long way.
No, that's
But
helpful. I mean,
I worry about it all the time, and
The loss of interpersonal communication skills, the ability to sit quiet, to be
critical
bored,
thinking,
to,
creativity.
yeah.
But they have the desire, that's not gone. And so it's, somehow, I like your idea of changing economic funding for education in some way. But it's a big, complicated, but important issue. I love that you're talking to me.
That's a great answer.
Teenagers
Thanks for
love to
that.
be
Thanks for that, Kate. Yeah.
Oh, now it's to you.
No, that was the answer. I think
Yeah, I
that's
know,
perfect.
I think great, yeah, exactly. Yeah.
So, I want to give it up for both Seth and Elizabeth, and this
Thank
work.
you guys. Thank you guys. I think